to Fibocan's YouTube channel. I am Prabhu KB, CEO of Fibocan. As you are aware, Fibocan is into the business of enabling wealth. We enable wealth through training, coaching, mentoring, enabling clients devise their own investment strategies through our technology products and solutions. Victory, meaning victory, innovative investment strategies, SOFR, Sonifar and Bermuds. They are very powerful and efficient strategies and work on all market conditions. In every video, we discuss what happened, why it happened, what will happen, why it will happen, and when and how it will happen. Which is why I request everyone to watch the video till the end, click the bell icon, encourage your friends and known person to subscribe. Today is January 21, 2023, Saturday. As always, in Saturdays, we discuss about the global markets, that is Dow, Nasdaq, S&P, currencies, commodities for the week of for the previous week, that is in this case the previous week of January 16 to January 20, that is Monday till Friday 2023. So Dow closed 33,374.37, 2.7% down, while Nasdaq closed 0.6% up, 11,140.43. S&P closed 3972.61, 0.7% down. FTSE closed 0.9% or 1% down, 770.59. So last week, if you recollect, what did we say? We said that there can be a small pullback or something that can come. Overall, the trend is intact. So the same thing happened, excepting in the case of Dow, which had a big fall and it has formed in the weekly chart a bearish engulf. Whereas Dow, Nasdaq and S&P formed a hanging man type of candle in the weekly chart. Technically, a hanging man is a reversal, but just because the rally has just commenced, we have to see how it is going to open up next week and where it is going to move. But when I analyze the individual components, when we probably line by line will go, Dow first. In the weekly, it formed a solid big candle, bearish engulf. Even we were surprised, as I mentioned, right? All MAs, it has, unfortunately, it has broken down the 50-day moving average, which was holding for some time. But we have to wait and see, because on Friday it had a good rally. All the indices had a good rally. So we have to see whether it is a false breakout or really a breakout of the 50-day moving average. So that's very important. So next week is crucial. At this stage, it has formed a spinning top, a small spinning top, and if it were to close somewhere around this level, then we have to see next week. It can next month it can form a bullish morning star. It is a chance, I'm saying. So hence now we have to, all things are possible, because the undertone has now from strong bearish it has turned into bullish. Why? Because in the daily chart particularly, we are seeing that the bands, lower bands are showing exertion. That means the selling pressure is arrested. So when we analyze in the monthly chart, it is less than 10-month exponential moving average, which is 33,600. And that is going to act as a strong resistance. Once it breaks that past, then we can see good up move. Nasdaq in the weekly, as I mentioned, it formed a hanging man type candle. 50 DMA in daily supported it. It moved above the 50-day moving average. In the monthly, it has formed a bullish engulf till now, and near the 50-month exponential moving average. So you can see that how significant the fall was in 2022. It is just below the 50-month exponential moving average. That means what? 50 months means 4 years average. That is the underperformance that happened last year, right? Weekly, it is still below the 200-week exponential moving average. Once again, it relates to the 4 years average, roughly, right? In the S&P, again it formed a hanging man similar to that of Nasdaq. It is hovering between the 50 and 200 DMA with current market price slightly above 200-day moving average. Hence 200-day, it is going to take support at 200-day moving average, and weekly the current market price is between 50 and 200 week moving average. Monthly, till now it has formed a bullish engulf, and it is less than 20 EMA, 20-month exponential moving average. So we have to see how the trend is, but overall the picture is looking not that bad. So US markets, definitely the big selling that happened has stopped. Probably it can be a better risk to reward play than any other markets, particularly more than an Indian market, because it is near the 4-year average price. So that means any up move can give a substantial return on investments. So hence, but I'm not saying that you go and invest, but what I'm saying here is that it provides a good opportunity than that of any other markets. FTSE on the other hand, weekly it formed a bearish harami, but FTSE is, as I said, it is very strong. In the monthly, it is still it is above all the DMAs and exponential moving average, and it is really strong. And this 1 week of bearish harami is not a thing for cause for concern or alarm, and it is a structural big up move in the weekly, monthly, and daily charts. In the daily, it is on the CBOE weeks. On the daily, it is also it is an up move. Okay, there is no doubt about it. On the CBOE weeks, 19.85. See, we have been telling that CBOE weeks is going down. It is drifting down on the weekly and monthly chart. That it happened, and hence we expect some more fall in the coming months. So, which is good from an equity market perspective because the volatility is relatively less. Dollar index at 101.781. In the weekly, it has formed a doji. Dollar index has formed a doji. In the monthly, it is just touching the middle band and exponential moving average. Bands are not showing exhaustion in the daily chart. That means there is further downturn that is coming in, and death, as we mentioned last week itself, death crossover happened. That means 50-day is now below the 100-day moving average, which is not a good sign. The same thing happened, similar thing happened in Dow, Nasdaq and S&P last year, and now all these indices, the 50-day is moved above the 200-day, which is a good sign. Whereas in dollar index, it is the reverse that is happening. Hence, we expect this year going to be very weak for dollar index. So, Euro versus USD 1.085. So, it is the opposite of it's the mirror image of dollar index. So, hence in the daily it is moving nicely along the Bollinger upper band and 10 exponential moving average and moving up, and current price is also moving up. That means the bands are moving up, the price is going up. In the weekly, doji after solid green candle last week it formed, which we said, right? In the monthly, it is moving towards exponential moving average and solid green candle till now. So, which is a good sign from a Euro versus USD perspective, not a good sign from dollar index, because the more Euro strengthens, the dollar index will fall. So, GBP versus USD 1.293. It is similar picture as that of Euro versus USD. The same thing, in the weekly it formed a solid green candle and it is nicely moving towards the upper band, and in the monthly it is just below the exponential moving average and formed a solid green candle till now. So hence it is in a significant up move. USD versus JPY 129.59, mimicking the dollar index. Actually in the weekly it is sliding down nicely along the lower band. As I said, it is mimicking the dollar index. In the monthly, just below the exponential moving average. Some selling arrested in the daily chart because we are seeing at least some calmness in this market, where we are seeing some few green candles coming in the last few days, which has arrested, at least in the short term, the selling pressure. Hence now we can see somewhere around 127.30 levels acting as support in the near term. USD INR, that's more from an Indian perspective, 80.979. Weekly it has formed a solid red candle like a shooting star. Monthly it is bearish engulf. Daily it is forming nicely riding along the Bollinger lower band. Again, we said it is between the 50-day and the 200-day moving average. Hence, like it is going to, last week itself we mentioned, I would request viewers to see my last week video where we mentioned the price is between the 50 and 200-day moving average. Hence, one will act as a support, the other will act as a resistance. So, US 10-year yield 3.482. Weekly it has formed a spinning top, long leg spinning top. As we said last week, some short covering happened, which is why we saw some long leg, lower leg, but that is not a true reversal, because we see that short covering has pulled it up. 200-day moving average is acting as a good support. It went near that, slightly touched that, and then bounced. Particularly on Friday, it bounced. So, but the long-term trend is bearish. But the big picture, things can change. But at least in the long term, that is not at least in the 6 months to 1 year chart, when we analyze, we feel that it is on a downtrend. But in the near term, there may not be a significant fall, but yes, long term it is in a bearish, it is under the control of that. Brent and NYMEX, we said that Brent 87.63, NYMEX at 81.64. If you recollect, daily it is moving towards the upper band, decisively moved above the 50-day moving average. We said that it is below the 50 and moving towards the 50-day moving average in last week. We said that it is going to take it up, break past that. That had happened, and it had happened decisively. Hence, the 50-day moving average is going to act as a support, while 200-day moving average is well above. So now it is near the Bollinger upper band in the daily chart, and in the monthly chart, it has formed a long spinning top or a hammer kind of a candle. So which is bullish, which is not a good sign for oil importing countries, particularly countries like India. I as an Indian is feeling not so good about this. So looking at this candle, hence it is definitely a worrisome factor for oil importing countries. So I am sure with all these things, it's going to give you a good insight of the technical positioning of all these indices. But largely when I analyze, the US markets have at least outperformed Indian markets in the month of January in this year. So I expect this year is going to be more or less like this if we follow the similar trend. The reason is very simple. If you take Dow, S&P, Nasdaq, in spite of this fall of Dow to 2.5% last week, still Dow is above the December close or last month's close, whereas Nifty last 2 days it was before above the on Thursday it was above the Wednesday and Thursday it was above the December close, but Friday it came well below the December close, whereas banknifty is nowhere near the December close. So that tells that how US markets have outperformed Indian markets. I feel that the risk reward ratio is better in US markets in this ratio, provided the macroeconomic factors remain stable. Thank you very much.